All right. Sorry, everything blew up like right before the stream was supposed to start, and I had to reboot and do a bunch of stuff. What's up? Oh, what a nightmare. Today's been today and yesterday and this whole weekend's been rough. What happened? Vent to us? Oh, it's just like we're we're getting we're getting ready to like launch the beta. Um like real close. I don't want to get anyone like too excited, but I think I think soon trademarked. Um so you want to be a developer, huh? No, never. I never wanted to be a developer. But yeah, this weekend's just been insane. Getting everything like set up and ready to go. Even just the last 3 weeks. What is sleep? Exactly. Yeah. And anyway, but so far so good. Things are on track. Just have like 900,000 more things to do in the next 5 hours. Short stream today then. I mean, maybe a little shorter, yeah. Prioritize. Trying to, yeah. 6 days a week from 6 a.m. to 9 p.m. Who, me? It's it's usually like 7:30. I don't wake up at 6 a.m. I'm not a psychopath. And that's like 7:30 till 4 p.m. 4 a.m. Yeah. Tell us the future concisely. There's no days off. Anyway, how's everyone's weekend been? How you guys doing? I should probably post this to Twitter that I give a shit, but there we go. Was the data telling us to full port Fubo? Yeah, everyone's gonna want to talk about that today. So Fubo got granted an injunction against the Disney Fox joint venture um, after their antitrust suit was finally heard. Obviously, really good news for them, right? A judge willing to grant an injunction is probably willing to hear out a case regarding the antitrust claims. Um, so, Fubo's beat the last 6 earnings calls. They've had consistently stronger subscriber growth. They've had revenue growth for 6 consecutive quarters. All of that was being realized up until around December of last year, at which point they filed the antitrust suit against Disney and Fox, and since then price has been just ground into the dirt, waiting for obviously some kind of decision on that. That decision came. Well, there's a very good chance that Fubo's got some legs on it now. I mean, I'm sure there's going to be some speculation uh, if the company were to um, realize the best outcome from their lawsuit. You know, their overhead would drop significantly, as would their competitions. But I think for them, it's more important, and they wouldn't get pushed out of their market by bigger competitors. Dude, I blacked out Friday. It was awesome. I mean, I still have my 20,000 shares. I've got a few grand in some synthetic longs and like long combos that I've been holding since, I don't know, like May or June ish. Um, so I mean, those were doing good, pretty good at the end of the day. Friday, you know, pushed above the $1.50 mark. There's sold calls at 150, 250. It could keep going. More of the chain's going to need to open up. But you know that could create some Vega exposure as the out of the money calls are attempted to be sold to compress volatility. I think it looks pretty good. They were in the middle of, you know, another nice round of shorting post netting, right? And that just got blown the fuck out on Friday. So I would say a lot of the short vol positions on it right now are pretty fresh. They've got some theta on them, which means they carry Vega risk. So it could be fun. Yeah. Obviously, we'll see where it goes. It's probably not going to go to like $10 or something crazy, but maybe like $3. I don't think three or $4 would be completely unreasonable. Could go a lot more than that. That really is going to depend on how many people pile in. But a 16% gain on the day on Friday was impressive. Vega risks seem like squeeze potential. Yeah, you could get a runoff in vol. It's really hard to say with these stocks that only have like, you know, three liquid strikes on them, right? Like Fubo's got like the dollar 50, 250, and $3 strikes. So it's just not it's not a very like deep chain. So it's really hard to say what will happen beyond what is, you know, on the chain now. Like obviously, you know, 100% move means they would need to open up the chain further. I mean, there's leaps. I think the leap strikes go up to like what was it? It's like $7. And there's definitely interest out there. I think the same is true for Jan of 2026. So yeah, there's a bit of room for it to move. There's definitely short vol positions out of those strikes. It really scared me at the end of Friday's stream. Are we crashing? Why did it scare you? It's just something to note, you know, when they talk about that specific setup. Um, that specific setup tends to actually have some unique properties, right? So when they're talking about like the new normal and then the market crashes, um, you know, generally anytime there's a correction, that chart gets brought up, but it's really only valid in certain circumstances. This is one of them. You know, it's usually after a major correction. It's, you know, when volatility doesn't really recover um back to mean, you know, and longer dated positioning doesn't build out sufficiently, and we're seeing all of that a little bit. And so, while it may mean nothing, which is usually the case, I would say that it's a bit more valid than it normally is. I think the speculation and media attention will provide it with a new floor. I mean, it could just get shorted back down again as the lawsuit drags out. But, I mean, in the near term, I could definitely see some nice improvement. 1 second. All right. Where were we? No, keep talking. My September puts. Why didn't you sell them? Why do people have September puts? Goddamn son of a bitch. When the market goes down and your puts are up like 400%, close them. Close them. You've made money. Who gives a shit if it goes down more? I'm just hoping I can get out of Fubo before the correction. Maybe. What happened at the end of the Friday stream? Yeah, I talked about like the false recovery. We're so far from a false recovery confirmation. What do you mean? It's still got to start coming back down after heading up, right? So the problem with that like, so hold on. Fucking Windows update, piece of shit. Everything is just all fucked up. Epic Pen doesn't work. It's a rare event, but I think my patience might actually be wearing thin. Okay. So, you get like delusion, new paradigm, denial, and then this is the bull trap, right? All the bulls are like, this is corrected enough. We're gonna buy the fuck out of this dip. Everything's totally fine. Right? And then fear, capitulation, then despair down further, right? And the reason this is kind of valid right now is this is the rate at which we're recovering makes the bulls positioning extraordinarily shaky, right? All of our price improvement has been driven by a renewed interest in the short vol trade, but almost none of it has been due to out of the money call positioning, right? So there's no durable positioning and no durable support that is coming in on this bounce, which means if we do have a sell off like 200 points, um all of that short put positioning is going to get squeezed the fuck out hard, right? And that's how you get a new low. So if you think about like trading S&P on the intraday, and you get a little drop, and then you get a bounce, and then that bounce fails, right? And then that's where you get your new low. It's really similar, right? Not too much different than that, just on a much larger scale. And given the impact of JPA's decision coming up at Jackson Hole, or the next FOMC meeting, we're really in a position where there's enough catalyst for something like that to happen. If JPAL comes out and announces he's not cutting rates, um, yields are gonna rocket and the dollar is gonna explode upward, right? And that's gonna help widen that spread against the yen. And that would probably save things, right? But um, should he cut, which he kind of needs to do, he needs to lower the burden on the treasury, right? Should he cut, look at what happened when Japan almost cut zero, or almost hiked 0.15, and we almost crashed, right? If the Fed were to move up, or cut like 2.5 or 5, um, the effect would be dramatic. I don't think JPOW is going to raise rates. I mean, there's no valid case in their model for raising rates right now, right? They don't have a reaction function, so there's nothing they need to do. And they can't really risk raising rates much beyond where they are now, because where they are now, I mean, the 10-year is probably never going to exceed 4.5, 5%, right? Um, if they were to raise rates higher, though, the chances of the top end of the yield curve moving into a range where pretty much every GSIB would have a significant amount of mark to market losses. Yeah, No, I don't think there's a situation where rate raises are on the table either. I mean, look at issuance, look at where the banks are positioned. If he does, I mean, there's a reason he stopped raising rates in 2023 and didn't raise rates to combat the upward momentum in inflation in October, and he didn't raise rates to combat the upward momentum in inflation through the first 4 months of this year. If the 10-year hits 6%, that's like, that would be, losses in excess of like $5 billion or $5 trillion. Isn't a pause just a way to force the market back to being more restrictive, effectively hiking rates? Well, it also blows up everybody that's piled into UST over the last month and a half, which is a lot. It's been bought. I mean, like almost every duration has been bought heavily. I don't know how many more cycles of the market pricing in the promise of rate cuts and then those cuts never being realized it can bear. I mean, every time we cycle through that, it's, I mean, there's wealth destruction. It's just minimized. I think the mark to market losses at a 10-year at 4.5% or 1.67 trillion. The 10-year at 5%, I believe, is like 3.4 something trillion. And then as it goes above that, then you start getting banks like B of A, JPM, Citigroup blowing up. And that adds like, like another $2-3 trillion to the pile. You get insurance companies blowing up, CRE, MBS. I'm long TMV and PFIX. You expect JPAD to be a good boy? Your favorite streamer and tweeter said to me 80% of US Treasury transactions come from 10 Caribbean bank accounts. Do you concur? I hate that moron. Can you imagine JPAL actually has a Volcker moment? It would be wild. It would be an option. I don't think it'd be that wild. I mean, the reaction would be extremely violent, but um, it's not the worst choice. I don't know how we pick up the pieces though. It's funny that Buffett owns more T-bills than the Treasury. No, it's just he owns more T-bills, I think, than the Fed. But I don't. I think that's true. You could say that about a lot of people. Like every prime dealer in the Treasury market. I mean, it's just I don't even know. We talked about this before. I don't even know why that's a talking point. Of course, he's just. I mean, he's sitting on a ton of cash. Of course, it's in T-bills. What the fuck do people think he's gonna do with it? Buy SGov? Let's not glorify the Volcker moment. Yeah, it's well, okay. Let me give you this, Willie. Without the Volcker moment, the late 80s, 90s, and early 2000s would never have been possible. And those times were pretty good, from, just the average person perspective. Employment was solid, pay was roughly what it is now. Um, Homes were cheap, cost of living declined. It took off the hide of people that weren't took out the hide of the people that weren't really at fault. Yeah, well, so the big problem with Volcker's approach was that it kind of indiscriminately attacked what at the time was a stronger middle upper class, right? So basically on the curve of wealth, if you were outside of the poverty range, Volcker's decision hurt pretty bad. Now, that's scaled, but this curve wasn't nearly as extreme as it is now either, right? The wealth in the US population was, far more evenly distributed back then. If you were to do the same thing now, because, the top 1% up here control that whole chunk of wealth, and then this is like 5%, top 5% of earners, right? And they control all of this wealth, and then you have like middle, upper, middle down here before poverty, which basically controls nothing now. um the effects would be far more outsized on people who are, wealthy or, ultra rich, because they have the majority of wealth to lose. Hey guys, sorry I'm late. Did we cover the only three important things in life yet? And I need to rewind. SPX, Netflix, and Fubo? Or can you do all three again? There's nothing important with Netflix. It already ran. Stop talking about it. Are any of you long-term picks currently in your buy range and worth revisiting? I bought a bunch of AQN last week. And the week prior, I bought some packs. So those were both in my buy range. I haven't really bought anything else. Can you take a look at Ulta when you get a chance? Yeah, I could. We had played Ultra recently to the upside. It's now far below that range, but I do think if it gets back over 400, it could have another nice run again. Obviously, the Buffett news is really bullish for it. Um, could see some continued price improvement from here on out. Um, it's pretty beat down. It tends to shine, and beauty products and beauty retail tend to do really well in recessions. Like the, their revenues don't really change much. Um, that's based strongly on historic evidence. And back in the 50s, and well, early to mid 70s, and the 1930s and 40s, when a lot of that data is derived, what people don't factor in is the reason beauty continued to do well was women moved into the workforce, and the standard of the day was women wore makeup to work. So women kept buying makeup, right? And this was a dynamic that was very true of the 30s and 50s, 30s, 50s, 70s, really, through any economic pullback. Beauty always did well because single family homes or single earner homes needed two jobs. Women went back to work. Women bought makeup to go to work, right? I don't think this is true entirely anymore. I don't think there's a lot of single income homes in America anymore, at least not, you know, in the middle of the bell curve. Um, and so women are already working, right? And wearing makeup to work is not what it once was, right? It's not an expectation anymore. It's, you know, some women do. Some women put on makeup. They like to get dressed up. Other women don't give a shit. Wear a hoodie and sweatpants to work. And I think that's a lot more fractured than it used to be. Also, work from home, and facial filters. Right, a lot of, you know, all of this can affect that. Right, you don't care about blemishes on your skin if you can just scrub them away with with Zoom. Right, like built-in tools in Zoom. So is Buffett's bet going to be true? Maybe Ulta's undervalued. They are a good company. They do make insane margins. Um, I've bought Ulta in the past, and you know, taken profit on it, and it's been a steady grower for quite some time, and I do think it was definitely a little undervalued at 320 after this correction. It's probably still a little undervalued, but it may not perform as well as people hope in the event of, you know, an economic decline. So I weigh that with the potential. I think it's more of a psychological thing as well, though, right? A lot of women wear makeup as a treat to themselves. It's one of those discretionary spends that stays consistent. No, not really. I mean, the correlation between like women returning to the workforce and makeup sales is really has been really strong historically. Um, I just don't know if that specific factor is going to be true anymore. As far as it still being, you know, like part of entertainment or, you know, social focus, it's just not, right? Like, so I don't think that's gonna be. I don't know if that's ever been true, but I definitely don't think that's going to continue to be true. I can see that you have girls getting into makeup at much younger ages now too, though. Kind of interesting the more you think about it culturally. Well, there's also like a push for like natural skincare and not, you know, clogging your pores with comedogenic paste, right? One second. All right. Anyway, Siri fundamentally goodbye below 3. Uh, there's arbitrage on the merger should the merger occur. That's what there is there. I mean, Siri pays a dividend. It's going to be convertible to Liberty Media Group shares at some ratio. I have no idea what it is. I don't really care about it that much. Merger arbitrage isn't like something I like putting my money into. Um, Maybe if I had a lot more money and I didn't know what to do with any of it, but I don't have that problem yet. He owns both. He owns Liberty Media and Siri. I think he owns Siri for the share lending, which is at like I think it's somewhere around like 30% annualized. And it receives a dividend and it's convertible, right? So and I think the arbitrage spread on the conversion is particularly advantageous below 3. I did the math in it at one point, but I forgot what it is and I don't want to do it again. All right. Let's see. 122. Probably gonna need to grab the quants here in a minute. Was there anything that people really wanted to talk about? I know someone brought up Netflix. I'm out. I mean, there's no fucking way I'm sitting in Netflix while it, chops at the top. Um, Netflix can have like 20, $30 of range when it rejects from an up move, and I'm not gonna fuck with that, right? Like I bought 650s and 660s. They went super deep in them. Like this, I think the 660s almost 15x, 20x. So yeah, I closed them because they were fucking weeklies, right? It ran the range of options interest. That's it. We don't need to talk about it every fucking day. And that's something I think the pickle jar needs to really learn. That's the only reason I'm being kind of a prick about it. When the realized move is done, it's done. That's it. Or the expected move is done. It's over. Just throw it away. Don't look at it again. Don't be like, "Ooh, my baby." You guys have a tendency to do that, and I think psychologically, it's because people are drawn to things that have given them returns in the past, and that's fine. It's fine to monitor something that tends to have outsized returns. There's usually a reason for it performing that way, but I think far too often people like miss the boat and they want to get in and they feel like, oh, maybe this could squeeze, a little bit more range out of this. And sure, it could, but the risk you're taking on by missing the initial entry, the risk you're taking on by, trying to play the next leg up after, one has already occurred or the next leg down, right? Is just massively compounded compared to the initial entry. So don't do that. Also, usually stocks, like especially single equities, suffer a lot from exhaustion, right? Like, everybody positions for a big move happens, and then everything just kind of goes, into consolidation for extended periods of time, or like not a lot of really interesting shit will happen for 3 to 6 months, right? So you want to be there when it happens, but you don't want to try to trade it when it's in that kind of in between period, right? Um, you got people, you end up with a lot of people that are like, I don't want to buy it at this fucking price. Or you got people that are up that are, pretty ready to sell. And it just leads to a lot of chop, and really not, strong directional trends. Now, indexes don't have that problem so much because they're so deeply liquid and there's so much interest in them, right? And this is This is one of the reasons why if you trade, you really want to learn to trade indexes at some point, because they don't suffer from that. Indexes will continue to trend and trend and trend in the direction they're trending in, right, for extended periods of time. But even there, you run into exhaustion. It just doesn't last as long. It's usually like a couple days, and then it makes another move. Anything on AMD this coming week are still very risky. Yeah, we could talk about it. AMD moved up a bit this week. I do have a position in it, but not large, right? I just entered a small position on it. If it continues to move up above 150, then it does have. Hold on one second. I just want to. No, you piece of shit. There we go. Yeah, so AMD has a bit of upside. It breaks through Vega neutral at 150 still. And the 150 breakout has a decent amount of interest out to 160. And then some interest is building between 60 and 80. Some interest is building between 80 and 200. But that 150 level is critical. So it's good that it continued to bounce off of DN from its crossover that we discussed last week, but not particularly great that it hasn't made it above 150 yet, and it could just reject here, right? I mean, what do you want to know about macro with China specifically? That's pretty vague. I mean, they're getting a little bit of inflation, but not as much as they need. They've got deflation in other sectors, which outweighs the gains in consumer inflation that they've gotten. Their industrial production's down, unemployment's up. They look like they're still pushing into a debt spiral, and they're having a very hard time pinning their currency against the dollar. I mean, it's a generalized view. I mean, is there something more specific? Political instability, I don't think. Um, that's really not an issue. Not yet. Or at least not an issue that they can't just crash. I'd have to look into their holdings for AMBC. I assume there's a reason it's tied to China, but I don't know what it is. Yeah, we could talk about AbbVie. AbbVie is still floating above Gamma Max. Some of the in the money positioning has started to bleed off. I rolled my debit spreads out to September. The delta at the money is starting to decline, and there's really not a lot of Vega risk to the upside. This OPEX expiration came with a decline of about $500 million in total dealer delta and a drop of about 30 million in gamma exposure. Hopefully that's enough to kind of upset the apple cart, and we could start to see ABBV begin its drop back into where the range in which the options market would prefer to see it priced, which is around 185, 180. It could losing 185 slip further, and possibly fall to like the 170 or 160 level. However, that will probably take some time, and it's one of the reasons I don't have puts on it. but most of the supportive delta is at 85, 80, and 75. 6 mobile ads thus far. I really don't know what to do with it, Dave. I mean, YouTube Premium. Here's the deal with the ads. All right. So I've got a couple of choices. I can I can turn the ads off, um, but Google can then just play ads anyway, because of the updates to their terms of service, and they do. Except I just don't get paid for them, right? And then they've changed how ads are distributed and what I can control in terms of ads being distributed. And so basically, the only thing I can really do is say no more than one ad per person every 30 minutes. This is the max amount of time that I can set it to. And this apparently doesn't work. People obviously get more ads than, what I am permitting, right? And so I don't know. I mean, I don't make more money. Like the ad revenue income is like the fucking same as it's always been. Nothing's really changed. So it's the ad blocker people who shunt them all to the mobile users? Probably. I mean, you can get ad blocker on mobile. You just have to use the YouTube like browser window versus the app. But I see a lot of people complain about it, and like my hands are kind of tied on what I can do. I could switch to streaming on Twitch, but it'll be a bitch to move all like the memberships and everything over. Um, and then I think subs on Twitch don't get ads, or no, maybe they do get ads now. Buy premium or ad block. Yeah, I mean those seem like the two best options. How much does premium cost? It's like $5 a year. Switch to Zoom. The stream will only be live for 30 minutes at a time. Anyway, those are the options they give me, so all right. Yeah, so we discussed ABBV. I'll pull up the chart too. I really don't have a problem continuing to sell bear call spreads on it, and even when I was selling them at the prior week at like 85 and 87.50, there were a bunch of opportunities to just exit them for like 15-20%. So even the ones I did end up having to roll forward, which were the 85, 87.50s, and I had to roll them forward to 85.90, are fine, right? Like I'm not particularly worried about those. I don't have a ton of concentration in them. Volatility is still declining against realized vol, so people are still selling calls against this. If you're going to maybe just take the trend into consideration for now until the trend fails, right? And try to keep your targets above trend. Because I mean, based on where positioning is on the chain right now, um, anything sold above here is really far enough out of the money that there's no other positioning there currently. YouTube Premium is like 13 euros a month in my region. Can you get like I think you can get like a VPN and purchase YouTube Premium in like Kazakhstan or some shit, and it's like 15 cents a month. No, no worries, Dave. I just wanted to kind of speak to it for everyone. Did Girk talk about the BTU large call position? Um, No, I did see it and hear about it. It could be, speculation. It's kind of an insane amount of OI. And it's very far out of the money, right? So somebody expects it to kind of mean revert. Their earnings were super fucking good. Um, I would say it's got enough theta. It's October that someone's expecting commodities to turn around, and they're taking a big bet on coal. I don't think they're sold. I mean, they could be, but it's pretty unlikely. I don't. The premiums on those contracts are really shitty. But it is massive. It's where was it on Friday? I think it's like 21,736 contracts at that strike. Is BTU still good for CSPs below 20? I mean, I'm a buyer on BTU below 20. Generally speaking, it didn't quite make it into my buy range on the last downside move, but they fucking destroyed earnings. They made $1.43 a share with a 3% increase in revenues, so 136% increase in EPS and a 3% increase in revenues. Can you expand a bit on the bull case for BTU and commodities there? Quite interesting. Well, if tech falls and mid caps remain fairly uninvestable, right? Then everyone's gonna want to buy commodities. That's just sector rotation, right? Obviously, if there's economic downturn, commodities become really attractive. Um, a stronger dollar makes commodities attractive. Economic recovery in China, which I think it's still really far away from, but that would definitely spur speculation on coal and energy, right? Just all energy, not just coal, but oil as well. All right, let me go grab the quants because I think they're in the room
Straddling
already.
the
Yo,
shit
guys,
for
what's
sure.
up?
So, but I mean, I did straddle it, and then it came out of my butt. But so
You know that
I had to close my straddle and then put it back in my butt so it wouldn't come back out. And after that, I achieved maximum stability. All my chakras got super aligned. It was great. I would recommend it.
Low variance chakras.
Exactly. Yeah.
just from
Um,
report, don't go past the don't go past like the bevel on the bottle because once
Oh.
it's all the way through, it just will suck it in, and it's not good.
Yeah. Yeah. You're right. I should be a little more careful.
especially if it doesn't have a flared base.
Yeah. No. Yeah. It's a beer bottle. What do you expect, right?
Yeah, that's true.
How you doing, Gert?
We'll get you into those wine bottles in no time.
I'm like feeling very on edge.
Why
Yeah.
is that?
So much shit to do in so little time.
He's gooning.
Yeah, so just gooning a bit. It's making it hard to joke,
I'm gonna come.
Oh god, we don't need to introduce the stream to the soundboard. They're just not ready for it.
There is no cock like horse cock.
Okay.
Send your ass
Do not
away.
push all the buttons right now. I know that's what you both want to do.
I already started.
So much for trying to launch a product with some modicum of professionalism.
Fuck that.
That's true. That's true. I think we're all too burnt out for that anyway at this point.
Oh, I'm so cooked, dude.
Launch the
So
turd.
Oh yeah, I did launch the turd this morning. It was
Good.
great. Uh,
The market went up. Short
it
vol.
did.
The end.
Yeah,
Yeah, they short vol
piled
7.
in and the market went up. Which, we bounced off DN, right? That's how it goes. But I think the real question is the sustainability of the pump, right?
Yeah.
How much higher can we go? How much longer can they keep this up without buying any calls? Which so far they haven't done, right? I don't think there's been a ton of calls. Also, there was some in the like 5,400 to 5,500 range. But outside of that, like there doesn't appear to be much call delta coming in out of the money. Mostly it just seems like there's just tons of short puts and they're all really exposed right now.
Yeah,
Yeah.
no, that's the thing about it is like you're pricing out any sort of variance in the market. So if any comes in, they're just fucked.
Yeah.
Well, and I think I said this last week. I kind of see these short puts as the primary position that's like really pushing the market one way or the other. But it had a lot of friends on the way up before. And now a lot of those friends are just starting to peel off. So it's putting more and more pressure on their shoulders to hold everything up. So it'll be interesting.
Yeah.
It always is.
Because one thing that's changed, so not only have the calls just kind of collapsed, especially on single stock names. That's where a big difference is. The way out of the money puts have also disappeared. So like more pure vol plays and not just short puts with long delta
Mm-hmm.
have also started to disappear, which is gonna I think pressure them and make it more difficult to get VIX all the way back down to 12 again, which is probably where they want it.
That would be
0, you mean?
ideal because they could get out of the short vol positions that were buried on the drop, right?
Yeah.
Because most of those are still open in September. Yeah, it's a tricky situation. Like Bulls got a lot of momentum off of the bottom here, but like you said, there's not that sustainability that was there. I mean, leverage is significantly reduced from like total available leverage is definitely reduced from where it was a month ago. Like yen's back under 150 to the dollar. Dixie's, floating around like 102. So like that dollar asset collateral leverage is um it's diminished as a whole, right? And correlation is like significantly improved between VIX and like VIX futures, right? And so we're not really we're seeing the sensitivity of volatility to changes in variance very high, right? Or at least the pass through is going to be very efficient.
You want to shill our product?
Sure.
Because I think this is something that Dork and I were discussing before the stream started. I don't know if we've released the name yet, so don't just like share the whole screen. Maybe take a snapshot. But if you go to the volatility page and pull up SPX or SPXW,
Yeah.
and then do IV10 and HV10, like we can't really find a suitable comparison to today. uh, over even back in 2022, we can't really find something as extreme as what we're experiencing right now in terms of the separation between IV10 and HV10.
So there, give me 1 second here. There is one goddamn piece of shit. There is one period. I will screenshot that and pull it up. There is one period where I think we saw something similar to this, right? And that would be, back in like November of 2022.
Uh,
We had like realized for through like the OPEX expiry and just after, realized vol was, or historic vol was at like 32 to, IV at like 17.
yeah, okay, maybe. I'll give it that. But it was kind of an anomaly, right? That must
Yeah.
have been whenever you see like a huge jump like that over one day, it must have been one day that just did something crazy that just skewed the whole measurement. But
Yeah,
here we had like this sustained build of historical volatility from July 9th to now, right? So like a month and a half of sustained increasing volatility. Uh, and IV 10 followed that pretty closely and then kind of blew out a little bit. And then now they've shorted it from 33 down to what is it now, 12? This is IV10, so this is at the money IV, which is a little bit different than VIX. Usually it's a little smaller than VIX. So IV10's about 12, which I think the lowest it's been on our data is what, like 8? Yeah, 8.1. So still pretty low. It got to 10 on Thursday. Um, but HV10 is still at like almost 24. And so you have this situation where just the natural volatility that is actually occurring in the market is massively higher than what people are pricing. So in my opinion, I think even just ignoring people's positioning and how that affects the future market returns, I mean, it is pretty likely that IV is way underpriced.
Yeah, I kind of agree with that. But is it, the worry is that it stays underpriced, right?
I mean, yeah, that's the thing. It's like the thing is the low IV at the money is like how the market maker is going to hedge it. So I mean, eventually it could become a self-fulfilling prophecy, right? Kind of like that period back in March we were talking about. But I mean, March wasn't even this extreme, right? But I expect looking at this chart, right, looks like HV has topped and we're probably just going to be in some very flat and not even violent chop, just like maybe big wicks, but close to close, just fucking nothing. That's the only
That's what
way
they
they can
need,
control it.
right? That's
Yeah.
we've reestablished a short vol position. There's no call side support, and so I mean, in order for this to continue, we're gonna need a drawn out period of realized volatility crush.
Like
Um,
we'll need like a fucking really drawn out one, like a
yeah.
month or two. Like like just a perfectly
The
flat month.
is that they're willing to keep selling more puts with more leverage. Those things are just slowly decaying constantly, eroding their position.
Well, remember that like realized vol on like the 30, 60, and 90 are all still going up.
Yeah.
Yeah, which has a pretty significant impact on the short term expectations.
Yeah, that's the part where I say it needs to be fucking just an absolute just war of attrition against volatility, because this will take a long time to settle down in the longer tail volatility measures.
Yeah, and then you look at things like, I mean, Apple has been absolutely like crazy pants ridiculous. Like you could even argue that Apple's drop was the thing that kind of kicked this off. And it's just gone straight up since then.
Yeah, Apple's
Uh,
had some ridiculous performance on this bounce.
it's actually starting to get pretty close to Gamma Max again, which is not something historically that Apple spends a ton of time doing. Um, Relative to some of these other more popular options chains. I mean, Apple's just so massive and such a stalwart that everyone's just kind of owning that doesn't do that a ton. Although this year it's been spending a lot more time at Gamma Max, but like we're already almost there again. So then you think about like on the single stock side, helping this short put position, how much more assistance are you going to get? I mean, I think Apple's getting pretty close to tapped out, which is a huge one. You can look at some of the other ones.
Nvidia, I think, still has some room to move up.
Nvidia's got room
Yeah.
for his sack of shit.
AMD looks like it's got a fucking shitload of room to move if it gets above 150.
The thing with Nvidia though is that the total delta on the chain has really not uh, grown. I mean, one of the really surprising things on its rocket up from about 100 or just under 100 to where it is now at 125. I mean, the delta on the chain is almost done nothing, which is very bizarre. And then I mean, you look at like its meteoric rise in the past from like $48 up to its high of 141. Like Delta went from like 50 billion to almost $200 billion. Right. So Delta like quadrupled and it was massive, right? And now it's just sitting at like a little over 100 billion. And this whole rise, it only moved like $8 billion from that bottom to the top.
Isn't IV just under 15, not 12? IV 10 on SPXW on Friday closed the day at 10.41.
Is the thing under 15 he's referring to the VIX?
I think so.
Yeah, the VIX and IV10 are different. So IV10 is just the volatility at the money. VIX is a calculation based on an entire strip of options. So all strikes.
Yeah, VIX is a function of
I would
spread
say
more
VIX
than
is a
more than
measure of
IV.
liquidity and out of the money options on SPX.
I mean,
VIX
Yeah,
is
yeah,
pretty
not
days
actually.
out.
I would say that VIX is not actually a measure of volatility at all.
It's a pricing of like a variance swap roughly.
mathematically,
Sort
VIX
of.
is the volatility if you could create a variance swap using only options, the VIX gives you the price of that options basket.
Yeah.
That's like just what it is. So
Yeah.
it's telling you the price of a variance swap, not at the money IV. At the money IV is almost always lower than the VIX. Actually, I can't think of a time when it
Ooh,
wouldn't
twat
be.
waffle. Why did Beyond save my port last Friday, and why was it so quiet this week? Oh, I think Beyond was just carrying around a bunch of exposure after forcing itself off reg show quickly. And they just covered it all at once. They
Okay,
didn't.
yeah. So Microsoft, and its bounce has been a lot smaller. Its delta's gone down. Like
Yeah, I
people are
saw that.
piling into Microsoft. So let's see. I mean, it seems like more semiconductors people are interested in. AMD, flat AF. SMCI flat. What's another one? ASML. No,
I mean,
what?
I feel like most of these, the delta is not going to improve until they get back above the the mean, like the mean reversion, where those September contracts were prior to the drop. I mean, like all the bulls just got rug pulled, right? So all of their out of the money positioning is still there. Like if you go look at AMD's chain, there's like a shitload of call interest from like 160 to 200.
Yeah, maybe on the but in terms of like just total market delta, which I've been doing some fun things and playing with, if you take even if you take into account all those out of the money calls and look at how much delta would there be if we went up there, it's like $1 trillion less than it would have been a month ago.
Well, how much of that is just the decay?
I don't know, but regardless, it doesn't matter, right? So they haven't been
Uh,
replenishing that position that potential payoff, right? I mean, people have just taken $1 trillion of payoff off the table.
yeah, I mean, we had a 10% correction, right? Like, I mean, there's definitely going to be some position closing, but kind of the way I'm looking at it is that those out of the money positions market wide, like in the dispersion focused trade, right, stayed on the chain, right? So they're all still out there floating. And due to the decay, we haven't really seen a shift in delta on the mean reversion that we've seen so far. So like they've just bled out so much as they get closer to expiry that it's staying in line with the rise in the market price. But if those start to go into the money, delta's going to move up positively really fast.
So I actually track that too, and it won't.
No.
Maybe stocks you're looking at, but as a whole, the market as a whole, it's just gone.
Hmm.
And when I say gone, like there's still a massive amount of exposure up there, but it significantly lower than it was the last time, when we peaked over a month ago.
Yeah.
Um, so fun times. So I do think that there will, if nothing else, there will be more volatility, which will make those sold put positions a lot scarier, just because people have less resolve than they did the last time, and maybe they come back, right? I mean, things have been slowly returning back to what we've seen before, right? Like when we started dropping the sold zero DTEs, they just like disappeared. It was wild. Like they just like were completely gone. And then now by the end of this week, they've pretty much come back and are doing exactly what they did before. So I think a lot of players are slowly gaining confidence to find this, return to normal. But there's still quite a bit of difference around. I wouldn't say we're in the exact same environment we were in before, and that everybody's hunky dory and we can just forget about that drop.
Well, I think this week was the best performant week of the SPX all year.
Yeah, I
Um,
think we
and I
understand
think
that.
I think that rapid of a move up is either going to need like Dork said, a really extended period of realized volatility crush for calls to get cheap enough to leverage the market higher, and that carries its own risk, right? Because we have so many like macroeconomic catalysts coming up over the next 3 weeks, um, that getting through that period with no change in volatility is going to be especially like no change in realized vol is going to be extremely difficult, right? I mean, jobs are going to be super fucking impactful. Obviously, anything out of the Fed, with the fears about the rate decision. Japan's parliament is meeting on the 23rd to possibly reinstate the rate hike. Um, so yeah, I mean, it's just the idea that they can keep this in place long enough to get that leverage to get the next leg up is I don't know if they can, like, from a, just a mechanical perspective. It seems like even the pricing of event vol is going to disrupt things.
Yeah. Well,
Like,
I will give
did you see gamma neutral on SPX? After we broke above it on Thursday, like after the AM expiry on Friday, it snapped like right back to spot. I think we even almost tested it Friday morning. Which is, I mean, in a bull run, let me try to explain this to everybody because I know you guys get it, but they don't. Like, in a bull run, gamma neutral tends to push away from spot as prices climb, or trails spot by a significant distance, right? And so the fact that like gamma neutral on the monthly, as soon as the OPEX expiration fell off, moved up like almost $100, and is now right at spot again, means that a significant amount of the positive gamma exposure that the market maker, or that bulls were enjoying from the market maker, right? Because the market maker is buying as price declines, right? And so the amount of exposure they have determines the strength of that dip buying. Um, and their exposure dropped massively, right? And so as their exposure dropped, gamma neutral moves closer to spot, and then that supportive protection from the on downside moves is now significantly weaker. And that's what we're opening this week on, right? Is that well, actually, I didn't look at Friday's GN yet. I probably should before I say anything else. But I think it's still fairly close to spot, right?
yeah, a
Yeah,
little below.
yeah, GN's it. Yeah, so it dropped a little bit on Friday, 55.08. But still pretty close.
Yeah, I mean, it's pretty tenuous right now. Like that's the thing, right? Let's just take a step back and think about this like idiots for a sec, okay? Because the market is run by those guys.
You
So
do have
here's what
to it.
I just want to boil down what happened, right? The market fell 10%, okay? Everybody and their mother jumped in and was like, "What's the carry trade? Why the carry trade? We all care about the carry trade." And then almost like 2 days after that, I think it was JP Morgan came out and said, "Guys, carry trade's closed. Everybody's out. We're good. Everything's fine." You know. Uh, but as a participant, even if you're a moron, right, and you're not like some sort of tinfoil guy, you see all that shit happening, and it's just like it feels like political theater, right? And I don't know necessarily how that instills confidence in a lot of different ways, right? Either in the strength of your equity portfolio, but also the strength of your bond portfolio, and also your ability to acquire capital. Because if JP Morgan is wrong and the carry trade has not closed, right, that could mean one of two things, right? It could mean, balls to the wall, let's fucking lever up, or it could mean any day now I could just not be able to get margin. And if I do want margin, it's going to come at a premium. And that's if I were an idiot running a gigantic fund and I needed, leverage like that in those quantities and at those scales, then I'd be kind of wringing my hands a bit. So, uh I think that's where people are at, and obviously the shorting vol, I think what they're really doing is they're just saying, I don't know what the fuck to do right now. I don't really want to go long tech if credit's about to tighten. I don't really want to go long anything right now. Guess I'll just keep shorting vol and getting my yields that way while I fucking boo and chill. So that's really, I mean, that's the feeling I get when I just try to turn off my brain and think like an idiot. I think to myself, I run $1 billion portfolio. That's what I would do. I would just short vol like I did, get my yields, hope for the best, and prepare for the worst by having that big red button that says buy back all your puts just kind of ready.
I mean, the returns on shorting vol are just so irresistible. I mean, even
Yeah,
I even
they're so
sold
good.
like the JPM collar put. I was like, fuck this. We bounced off this shit once. I'm gonna sell some of these, and they were like fucking $50 a contract 2 weeks out, right? Like, who was gonna say no?
Yeah. No, that's the thing, right? Put on your idiot hat, and shorting vol still at this point, especially when it's elevated like that, that's when it's even more attractive to jump in and do it. It's scary, but if you got big brass balls, which a lot of these people do, you don't become, like you don't run a fund
I would
being
actually
being a
argue that
wuss.
it's less scary to short vol when vol is that elevated. Especially when
Okay,
the
yeah.
especially when you have like cash VIX at 64 and VIX futures are at like 30. Like you're really just arbing the spread at that point, right?
Yeah, and there's
Yeah,
there's
the
always
market
the
maker wasn't buying anything at this print. I mean,
Like I'd be way more scared as an institution to short vol when VIX is at 12 than I would be to short vol when VIX is at 64.
Yeah, that makes sense, right? Because like the short vol trade, like especially at those high levels, is practically guaranteed to pay out.
Yeah.
That's kind of why it quickly snapped shut, though, as everyone was thinking that.
Also, your capital allocation is lower because you don't have to sell as much of the position to achieve a similar yield. And then even on top of that, if you can hold the position, right, through whatever VIX hits, I mean, eventually it's going to pay out. Like
Yeah,
even in like a crazy like depression type scenario, VIX would probably just be chilling at like 30, you know.
yeah,
And so yeah,
indeed.
getting a short on it at 60 is whew, fun times.
yeah, but I don't know how many people were actually getting that right. I mean, the spreads had blown out, so you're not really getting a VIX 60 sell. You're getting
Well,
like
you
a VIX.
do on SPX though. Like you're not gonna get it on VIX.
Well, no, I mean the VIX is the spreads on the SPX were blown out. That's why the VIX was 60. Like
Yeah,
because
they
nothing.
were.
Yeah,
But
market makers were demanding a serious premium.
but I mean,
Like I,
even then, like outside of the VIX window, you're probably gonna find healthier spreads and shorter dated options.
I mean,
Ooh,
I,
Jordan, you
I,
know what we should do? I have an idea for what we should do. Ooh,
Let's not
I don't
talk
think.
about it. How about that? Um,
I DM me. Let's do
Don't give away the too much alpha. Whoa.
yeah,
it.
Mr.
Oh
Professor.
Lord,
I just want to teach
reshape
the
the options
masses.
market. Uh,
Where can I see IV10? Ooh, this is an opportunity to shill our stuff on our platform.
which we have not provided the name for yet, and which you won't be allowed in for a long time.
Like 3 months, yeah, at least.
Yeah.
But it does it is a thing that exists esoterically somewhere out there.
Yeah, I think Fidelity just straight up gives it to you.
I think yeah, Fidelity has an IV. I don't know if they have an IV10 chart. I know that you can plot 30.
I don't know if they'll let you plot it, but you
Well, not
can.
3 more months for you, Cobra. 3 more months for the regulars,
The poors,
the
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 middle
poors.
poor.
Unless we like are just amazing and we can get it done sooner. But no,
I
we're
mean,
we're
Eric, you
we're
know me.
planning on having it out for. I guess we should just say it right and commit ourselves to it. We're we're hoping to have Pigeon Whales onboarding to the platform in the next like 24 to 48 hours.
Yep. I mean, we're pretty much like almost. I mean, I think that we're like pretty much there. We just need to make sure that nothing egregious is going to happen, right? Like we don't accidentally scam somebody or some stupid shit like that. That's always got to make sure it doesn't happen, and then I think we're
Yeah,
set. And we're really close to that too. So
yeah. Well, I don't know about scam people. We just don't want to make sure that like payments are disappearing or anything
That's what I mean.
Anything,
Yeah,
yeah.
just weird shit. Yeah, I just don't the weird shit. We want to make sure that everything happens exactly as intended. So
Everybody in the quant chat's already talking about how you just said 24 to 48 hours. Thanks a lot.
You're welcome.
uh, we're hoping. No one heard the hoping part. It's just like when Girk says, you know, the the upside could potentially go up, you know, another $40, and everyone just hears up $40. So it's the exact same thing happening right
My
now.
favorite is when I'm like, this thing doesn't look bullish at all until it gets above X price. And then everyone's like, okay, Girk, so I longed that thing. When's it get bullish?
Uh, everyone's trying to catch some kind of knife, right?
Yeah, well, last week I was like, AMD's really not that bullish until it gets above 150, right? And it's been moving up. It's had a good week, like everything else. But it's still not bullish, right?
They try to hold on, Dork. They try to catch every knife except selling puts.
The pickle jar hates selling puts for some reason. I never see anybody like, oh, I sold a bunch of puts today.
Dude, selling puts is that's like page one of option strategies. It's the thing you do when you want to buy stock. You sell puts.
I mean, I'd rather have JPM protecting my god awful spreads than, trying to short the top of the run. And then finding out there's a secret top in the back half of the day.
Secret top.
Love me some secret top.
Nothing like seeing $1.5 billion of just raw 0 DTE delta pop up on the chain right above spot.
It's the best.
Those are my favorite days. When you're like, oh, this is definitely closing at like X price, and then we move up $50 in the last 20 minutes.
Dude, that one day last week where we went up, what was it, like 30 basis points in a minute?
Yeah.
That was insane.
Yeah, everyone was like, Girk, why are you still holding your puts? And I'm like, well, because they're worthless now.
Yeah, that was a ridiculous close. What day was that?
Oh, I think it was like last. Yeah,
it was 16.
I think it was maybe like last
minute.
Wednesday or something. It was fucking stupid.
Yeah, this whole market's just it's so dumb, dude. Like the thing is everybody is extremely eager to price out risk. Like everybody wants this to be a real bull market, right? And by some metrics you could say it is, but when you look at the mechanics underlying the move up, right, it's not like some sort of huge rush into anything besides pricing in 7 stocks owning literally the world. So
Ropeless jump rope?
Yeah, do we need to get into that?
No.
I think you put the little ball things on your nipples.
What if you just really don't jump? You don't like there's no mechanism forcing you to do the thing, like complete the activity. You just spin them around.
Like at that point you might as well just jump up and down. Like why do you need these little electronic handles?
What's really important is that they've turned an activity that just requires a $5 rope with handles on it into like a $200 activity without elevating that activity in any way.
In fact, they've made it worse.
This is JPAL, this is what you've done.
Yeah.
This is what 0% interest rates has created. Shit that nobody needs or asks for that solves no real problems.
I have a song about that.
I don't.
I do. Wait, have you guys not heard the JPOW song?
Can you play it?
I can.
Like right this instant?
Yeah, as a matter of fact. Can you hear that?
Nope.
No? You're gonna have to
Did
listen
you
to
hear
the
it on the
stream.
stream?
Yeah.
Okay, hold on. Let me pull it up.
Hmm. I'm getting my lighter out.
You should, yeah.
In a town where trains pass slowly, I sip my coffee dark and strong. Prices rising with the sunrise. Each day's harder, feels so wrong. Jerome Powell, you're no hero. Not the man we thought you'd be. You're just a shadow of Volker. Arthur Burns in our memory.
Okay, sorry. I just got in through the ad. Started over and turned it up. Sorry.
Here, I'll just download it and you guys can listen to it. Ridiculous.
Scott, I'm happy my mom got me premium. She's like, "Hey, I added you on my premium thing." I was like, "Nice, sweet. Now I don't have to deal with fucking ads." Back in the good old days when you were a mod, you didn't get ads on the stream you were jumping in, but Google was like, "Nah,
Yeah,
let's
right.
uh, let's fix that."
Wait for the political ads to finish.
Yeah,
Called
no,
it.
sir, dude. Okay, here, hold on. I'm gonna have a fun little experiment here where I count the amount of political text I've gotten in the past 2 weeks.
What are you, like a registered voter or something?
I think I answered one of those like calls, and then yeah, I've got, dude, it's like literally the only texts I have. Like there's
You want me to text
like
you
over
so you feel better?
there's over 100 of them. You know, Girk, that'd be great. I would love it if you would text me because then I would send you a picture of. I'm not gonna say it on stream.
Oh, okay. Nice.
Yeah, it's gonna be great.
JFresh is just off listening to the song now.
Oh yeah, he's deafened us because he doesn't want to deal with our shit. It's perfect time for us to get into tinfoil shit, huh?
It is, or we could wrap this shit up and get down to business.
You know, you're right. The shit you brought up in the what's it called channel, Jay Fresh and I were discussing it, and that's definitely something we need to address. It's not like something we could like get fixed like today, so we'll just have to be like sorry, but it'll get fixed because it's weird. It's some weird shit, and it's I think it's a me problem, so I'm gonna
Okay.
figure that out.
All right.
So we'll see. I
Have you
I
on mute? I'm
definitely.
listening to this whole thing.
I just want to say really quick, Girk, uh, for folks out there, because you know we're talking about macro and stuff. There's a chart I want to bring up,
Okay.
just really quick.
Yeah, which one?
This is the perfect one to bring up actually, while Jay Fresh is not listening to us. It's in the chat now.
Okay, I'll throw it up. Oh, it's
Yeah, yeah,
your
the
inversion
one,
chart.
the good one. Yeah. I don't know if people remember, but on I think it was July 23rd, I posted the meme of the dude with the ball, right? It said market go up, and then the pink dude shows up and its ball goes down, and then the giant orange dude shows up and its yields go down, and the market ball falls, and kind of fucking nailed it. So you know where we're at right now in the bond market is, if we think the vol market is tenuous right now, the bond market is like 5 times as stressful because yields are very, very tight. Like the yield spreads on the longer dated shit, they're just super tight right now.
Yeah.
So this could really go any direction, and unless we get a huge bounce in yields from some like inflationary data or something, like that's the only real thing that will keep credit from tightening further. If we stay in this range, for too long, credit's just naturally going to tighten over the next like quarter. It's going to be ridiculous.
Yeah, I agree.
So I just want to bring that up before we wrap it up and make sure people are aware of what's going on in the bond market to keep an eye on the yields. Like if the 2-year stays at 4% and, you know, I don't see a world where the 2-year stays at 4% and like the 10-year goes even lower. Like the 10-20 spread, the fucking 2-10 spread, it's just fucking ridiculous right now, and I don't think it's gonna last.
Hmm. God, I love that.
So yeah, it's just something to be
Yeah, I
aware of.
mean, no
And
bank in their right mind is lending anybody the 30, like a mortgage at 4%.
what's funny, what's the funniest part is that there was a really big attempt like to stop the bull steepener. It was crazy.
Yeah.
Like that part kind of blew my mind. We almost had a major bull steepener, but that would have been super duper bad. And that's why the market almost fucking crashed, is because we got a huge re-steepening of the curve. So I'm kind of on my toes. I'm not gonna fucking dance if that happens though, because that means that like, you know, it's one of those things where like you remember back in like 2010 when everyone with their fucking jumbo loans and shit were trying to refinance them and all the banks were just like go fuck yourself. I mean
Hmm.
that's kind of what this leads to.
Yeah, yeah. That's exactly what it leads to.
Yeah, so I'm not really going to be stoked about that, but that's healthy, right? We want a more discerning credit market if we want to have a functioning, healthy economy. So anyways, yeah, just be on your toes, keep your eyes out, uh, keep an eye on especially on short-term yields like the 1 year. If the 1 year gets like, you know, down below 4.25, we're in for some fun stuff. Well, fun stuff. We're in for some actually kind of less than fun stuff.
I
Um,
think short interest on the 5-year, uh, futures is the largest it's ever been.
Good God.
Yeah.
I mean,
Fuck.
what moron in their right mind would actually buy a 5-year at 3.75 when inflation itself is 3% and the economy is not going to go like to zero growth?
I mean,
No,
I
yeah.
just sold like most of my duration over the last like week. Like most of my like 2010 5s. I kept a few, but they're all at like 5+% interest.
Yeah. The
Wasn't
only
Fuji
reason
hella
these
short
rates are low
GLT?
is because big banks would blow up if they weren't. That's
Yeah.
the only reason. There's no other rational reason for why the rates should be where they are.
Yep.
Yeah. No, the whole I mean
Well, it's
and the
liquidity provided by the Treasury is ensuring that rates are staying low.
yeah,
Otherwise, the 10-year should really just be in line with the Fed funds rate.
I remember March 23, dude, right? So the funny thing is in March 23, if we're being completely honest with ourselves, the Fed probably should have cut then and then slowly raised rates again once all the bank shit sort of sorted itself out. It would have collapsed some spread shit, but it would have been a lot better to do something then that eased, you know, domestic credit conditions and allowed banks to lend more freely for a little bit. But we're just in such a fucking crazy situation now where the moment JPOW said like rate cuts, like it's too late. We're so far gone now on the whole fucking credit market that it's just a giant powder keg.
The Fed has never been a solution to any of this.
Uh-oh.
What?
What's going on with there's stuff coming up. All right. We've got fires to put out. Let's
Yeah, that's in it. Government. I'll just say what I say every week. The government's growing the deficit at 8% in GDP, even more than it was before. In the last 22 days, it's grown the deficit by like $130 billion, which is like a $2.7 billion burn rate year over year, or trillion. Sorry. Yeah, you're gonna have issues with inflation until that problem is solved. It doesn't matter what the Fed does.
Damn fucking right. Good
Are
shit.
you
Predictions. Do we need to predict shit?
this?
What was that?
You guys want to all go read a terms of service? Sounds great.
Sounds like so much fun, but we need to predict what the market's going to do so everyone could lose money.
Oh yeah, sure. Market's gonna go. I'll go first. I don't care.
Already made one.
What is it?
It's like down and then up and then down a little bit. But we have
Mr.
flat.
Deficit spending is real. Sorry, what? It's gonna go down a little bit and then down a little bit more. Is that what you said?
It's like down and then up and then down. So flat.
My chart's in the way.
It's like flat by end of week.
My prediction is literally flat. Just make a flat line.
Well, shit, I just said I'm going to go first, and now I'm literally going last.
I mean, you were like 400 basis points off of the end of the week price. Don't worry about it.
Yeah, maybe I just won't even put one up. It doesn't even really matter, right?
What are you doing? What's J Fresh's? Because I didn't hear Dorks, so it doesn't matter.
I just said
flat.
Dorks said
yeah,
flat.
perfectly flat.
Just
perfectly flat.
So just the same.
Zero okay. Variance intraday, nothing.
Straight line down to 5,400 end of week.
I love that one, Jay Fresh. I hope you're right. I'll make a bunch of money.
I'm not ready for that one.
I'm kind of ready. That would be fantastic.
Line down to 5,400 end of week. All right.
Done.
That's actually not a bad one.
I just think that this thing's gonna poop out. It's gonna turn around and then it's just gonna go whee.
Love it.
All right, there we go.
Oh, let me screen cap.
I'm thinking like small drop into tomorrow with the decline in Delta, and then a rise into GDP, and then down. But I don't know how down from GDP. I do need a slightly different prediction than Dork though, so I'll just go. I'll just go to like right at like gamma neutral. There.
All right, hold on. Now I got to do it again.
Yeah, we do.
Fucking goddamn motherfucker. Fucking making me do shit.
You're so eloquent. Your words. Your word things.
You know, I mean, I've been in the production business for a long time, and that basically makes me a sailor. If there's one thing I know how to do, it's cuss really badly.
Most people know how to do that.
Goddamn motherfucking piece of fucking shit. Fuckity fuck.
Blown out leather Cheerio.
That's gross. All right, let's get the fuck out of here and go do some shit.
Yep. Thank you guys so much for tuning in. If you guys have any questions, I'm not going to be around today. But I will try to get to them tonight if I can. Later, guys. Thank you so much.
Thanks for having us, bud.